As we all know, the Indian government has finally broken silence about where it stands on cryptocurrencies and the trading of crypto assets. The Union Budget 2022 included a lot of policy changes surrounding cryptocurrencies, which received a bittersweet response from investors and the ever growing crypto community of the country. Hello and welcome to King's Charts. In this video, we will break down everything you as a crypto investor need to know about the budget and try to uncover how these policy changes might pan out in the future. The Budget 2022 has majorly presented four policy changes when it comes to crypto. The four being 1. The definition of cryptocurrencies, 2. The taxation of earnings from crypto trading, 3. Clarity on gifting of cryptocurrencies, and lastly, the introduction of the much anticipated CBDC. Now, without wasting any time, let's dive right into it. First things first, the Budget 2022 has put an end to the very incessant debate we all witnessed this year concerning cryptocurrencies and whether they will be defined as a currency, a commodity, or an asset. The government, standing by its original stance of not letting crypto be considered a currency, referred to the same as digital or crypto assets across the entire presentation. Effective 1st April 2022, all cryptocurrencies would be slated as virtual digital assets, which are proposed to be defined as any information or code or number or token generated through cryptographic means and providing a digital representation of value. The detailed definition covers both fungible and non-fungible tokens. The interesting thing to note here is that the government is neither calling crypto a currency, because then it would have to fall under the purview of RBI, nor is the government defining it in terms of a regular investment, probably due to the lack of a regulatory body like SEBI in this space as of now. However, this definitely seems like an acknowledgement on government's part of the fact that cryptocurrencies have become a substantial part of the economy and our investors' portfolios. Next, and you might want to hold back your tears for this one, the government has clarified as to how cryptocurrencies and the income generated from its trading will be taxed from 1st April 2022, and it's not looking good, especially for our frequent crypto investors. The budget said that any income generated from the transfer of any virtual asset will be taxed at 30%. This means that if you earn a profit of INR 1 lakh on a crypto trade, you will have to pay a 30,000 tax on the same. Besides this, no deductions or exemptions or set-off of any loss will be allowed while computation of the final amount. What this means is that you will not be able to set off any loss arising from transfer of these virtual assets against any income or gain you generated from any other source. Further, such loss shall not be allowed to be carried forward to subsequent assessment years. Needless to say, this particular advancement has not been received well by investors, and fairly so that is. The government has blatantly placed crypto income under a ridiculous high tax bracket of 30%, which comes off as a tad unfair as compared to the tax charged for the income from other sectors such as business and stock market. It's interesting to note that the government is charging as much tax on crypto earnings as much it does on gambling winnings. Coincidence? We think not. Apart from the income tax, the budget also mentioned that the government, with a clear intent to tax more on transactions carried out in relation to such crypto assets, will now also charge a tax deduction at source or TDS at the rate of 1% on any payment for transfer of cryptocurrencies. What this means is that if you transfer a cryptocurrency from one person, one wallet, or even one exchange to another, you will be liable to pay a 1% tax on such transfer. This rate again feels too high considering the frequency of such transactions. A good thing, however, that might come out of this stringent policy is that the people who have been blindly trading in meme currencies and other assets, simply following the market hype with no real information about such assets, will now be more careful before making such decisions. This might bring some semblance of regulation and stability to the very volatile crypto market. As far as gifting of virtual assets is concerned, the receiver of such gift will also be liable to pay tax on the same. This means that if your friend gives some Bitcoin to you on your birthday, you will have to pay tax on receiving this gift. Well, not a very happy birthday for you. Lastly, Finance Minister Nirmala Sitharaman also announced the upcoming launch of a central bank digital currency or CBDC to be called Digital Rupee. This digital rupee will be the digital electronic form of fiat currency, fungible with physical currency, and is set to be launched in the year 2022-23 itself. The digital rupee will be issued by RBI and the pricing of it will be entirely regulated and controlled by the government. The government expects the introduction of this CBDC to boost the digital economy of the country and lead to a more efficient and cheaper currency management system. This digital currency will be based on blockchain technology, although we don't have any information about on which blockchain network the Indian digital currency will be built on. Regardless, India coming up with its own blockchain based digital currency is a good news for the entire crypto community. It definitely points towards a blockchain forward future. The bottom line is that even though the budget 2022 might have seen a few million sad faces thanks to an over the top tax bracket and very stringent computation restrictions, it's important to not lose sight of the big picture here, which is that as unsettling as it may seem, it's very much still progress. Progress that we absolutely cannot ignore, especially given the fact that the same government who was trying to cast a blanket ban on crypto a few years ago has now not just acknowledged crypto as a legit asset for investment, but also come up with its very own digital currency. Although 30% is a bit too much, this is merely the first step taken by the government towards legalizing and regulating cryptocurrencies. And regulation takes time, it's a long process. So, what we should take back from the budget 2022 all in all is that the worst is over. And as the government slowly understands more and more about cryptocurrencies and blockchain technologies, things will change for the better and the policies introduced will see some reasonable modifications. Till that happens, let's just remember that we have come a long way and there is still a long road ahead of us. Before we end the video, one small request from our end is to go check out our recent tweets wherein we are calling upon our fellow crypto investors in support of reducing the crypto tax. As investors, it's important for us to express our sentiments because we form a very substantial part of the crypto ecosystem, and it's times like these that we must leverage the power of our unity. See you all again in the next episode.